Welcome back, my dear students. In the previous lecture, I have completed about the formation and basic characteristics of ascending channel on a price action chart. From this lecture on, you will learn another strong channel pattern, that is a descending channel pattern. So in this lecture today, I will be talking to you about the formation and basic characteristics of descending channel on a price action chart. Descending channel is a bearish continuation pattern where the price movement is contained between two parallel descending trend lines. So let's start. Descending channel pattern is the exact opposite of an ascending channel pattern on a price action chart. Descending channel pattern has two parallel trend lines that are sloping downward. In this case, the descending lower line acts as a support and descending upper line acts as resistance. In general, descending lower line serves as main trend line. It should be at least two consecutive points forming lower low point to be connected. More points in the trend line indicate more strength in the pattern. The main trend line acts as a support in falling channel pattern on a price action chart. As you know that a descending upper line as a channel line, it should be at least two consecutive lower low points to be connected. More points indicate more validity. The channel line acts as a resistance in the descending channel pattern on a price action chart. The price is limited between the two trend lines until the price continues to trade within the boundary of the support and resistance channel line. When prices are not able to reach the support channel line, it is an indication of a change in trend. The price break above the resistance channel line, further indication of a change in trend. The price break below the resistance channel line indicates the continuation of bearish trend. In descending channel, taking a long position is a viable option when the price touches the lower trend line of a falling channel. On the other hand, you can taking a short position when the price breaks below the lower channel line of a descending channel. You can place a stop loss a little bit below the lower line to be on a safe side and avoid losses. Let's see the real chart example. You will notice that this is a downtrend market. Two trends are going to parallel to downward direction. Falling channel are connected to lower low to act as a support level, and channel line are connected to lower high act as a resistance level. Falling line and channel line are those are going to parallel with the downtrend market. When price touches the support level and the price break below the lower channel line, then you can taking short position. On the other hand, when the price touches the resistance level and when the price break the upper channel line, then you can taking a long position. So not more today. Have a nice day. Goodbye.